Hey everyone, it's Martin Lightbound here on Point Financial, and what I wanted to do is just fulfill a commitment that we made last week to you guys about putting together a video about how to go about and get competent advisor status. Now, if you're watching this video, you're either probably considering becoming a mortgage broker, maybe you are starting to study CeMAP, maybe you've just passed CeMAP 1, maybe even 2, or maybe you've actually finished CeMAP and you're now going, what's my next steps? So the whole purpose of this video is to go through and help you work out how to get that competent advisor status. Because once you've got CeMAP, you've got the first step in your career. After that, you then need to get the experience to have competent advisor status that allows you to practice as a fully qualified and competent mortgage advisor. So what does that look like? Well, once you've got CeMAP, or some places like ourselves can take you on before then and get you experience and speed up the whole process for you, is you then need to go through somewhere that's going to take you on as a trainee and get you that competent advisor status. And that journey will pretty much look at the point where you're going to have a couple of accompanied visits with a client to make sure that you're giving the right information, you're following the compliance process, and delivering a great customer outcome. Then you'll have a period of unaccompanied visits where you're giving your own advice, maybe overseen by somebody else, and with enhanced compliance due diligence and all those checks that go with it. And then after a period of about 6 months at that point, if you've been giving good advice, your compliance has been up to scratch, you'll then be awarded with competent advisor status that allows you to practice as a fully authorized and regulated mortgage advisor when you're with a regulated firm, or if you set up on your own once you've got a bit more experience. So how do you get that illustrious competent advisor status? Well, I'm not going to mislead people here. It's probably harder to do that right now than it has ever been in the last 10 years. And the reason for that is there's traditionally been 3 routes to get that competent advisor status. The first wave was through the banks, and right now they've actually withdrawn most of their trainee and actually all of their trainee positions from what I can see. And the reason for that is that they're overwhelmed with volume basically. They've cut a lot of their products. Some of the banks now, as of this week, have now dropped their lending to no more than 60% LTV, meaning if you're a mortgage broker for them, if you're tied to them and that you work for them directly, is you can't get anyone a mortgage in that case who've got less than a 40% deposit. Now, while banks were phenomenal for bringing people in, training them, getting them experience, helping them get used to dealing with clients, the problem I found with people who went to the banks first is when they left that to go into the wider industry, and all of a sudden they had 60, 70, 80, 90 in our case, 95, or even more lenders to deal with and hundreds of products. It could be really overwhelming when you've been used to being an expert on one lender with 3 or 4 different products. The nice thing with the banks though is they did employ people to be trainees and would pay you throughout that whole training process, because they were more focused about getting people through than necessarily about making money from it, because they're a big enough organization. Unfortunately, a lot of the banks aren't even recruiting an experienced advisor right now, and 2 or 3 of the major banks in the last 2 to 3 weeks have put hundreds of mortgage advisors on notice that they're going to be laying them off, potentially if the market doesn't recover, or depending on how the market recovers, or even depending on their capacity to even handle or cope with the current market. Those of you who've been in the industry probably know that a lot of the lenders are struggling right now because they're still work from home for the most part. Some of their international call centers are down, and lending volumes are about the same. However, applications are through the roof. Some of the lenders are 300, 400% on applications, because with the no stamp duty, lots of people want to buy. So unfortunately, unless you know someone who works for the bank and have a way in, for the vast majority of people, using the banks as an employed option really isn't an option right now. Hopefully that will change after COVID's all sorted and potentially after Brexit, but right now that really isn't an option, and especially with them laying people off, it becomes very difficult for them to then bring trainees in. The second way that a lot of people got experience was going into an estate agency. Now, this is a great way if you can do it, because what happens is you've got a nice solid lead source, you've got people coming in buying houses, and if they're trained properly, the estate agents going out will refer every single person back to you to get the mortgage. Now, what you'll find with estate agents is, depending on the estate agent, it can be a bit more high pressure. You've got targets to hit, you've got conversion numbers to hit, and it's more about speed and volume. Whereas in the banks, it's more about taking your time, getting used to it, that type of thing. Estate agents are generally a bit more high pressure. Not on the client, but on you to actually deliver, because they are much more commercial operations. And most estate agents don't actually make a huge amount of money. The way they make the vast majority of their money is in their financial services arm, or by referring financial services, or dealing with all their different referral partners to boost what they're doing, because there's only so much a client is willing to pay to sell a house. Right now, to be honest, a lot of these estate agents aren't taking people on, and some of the major estate agents are laying people off because, again, the market's up and down, they're worried about a second shutdown. There are, however, some of the smaller independents where they've got somewhere between 3 and 10 branches. A few of those are taking trainees on, are taking brokers on. Some of them are taking trainees on, and it's a case of just phoning around and asking what they're doing. However, just be aware, competition is really, really stiff, and quite a few estate agents now are trying to push away from the employed model and putting it more on the self-employed model. And that's generally, without stereotyping, is what you'll generally find is a self-employed advisor is generally, and this is going to cause lots of chaos here if I'm not careful, but generally people when they're self-employed are more committed, they're more driven, they're more likely to work the evenings, work the weekends, as opposed to someone who's employed 9 to 5. And that's why a lot of brokers, to be honest, in the real world are self-employed rather than employed, because they want to deliver that level of service. But on the upside, you also earn according to that. So it swings and roundabouts. And then the third way, and this is probably the best way right now in the current market, is through a broker like ourselves who takes on trainees. Now, whether they can take on trainees or not will depend upon the network they're part of, will depend whether they're directly authorised, which means they're directly with the FCA themselves, or whether they're part of a network like we are, where that network allows them to take people on and train people. And that can be really good. It's a fantastic way of getting experience. Now, of course, I'm going to say that I'm in that world, it's what I love. But the best thing there is you've got a really nice wide panel. You don't have the same ties as an estate agency does. You've got a wider choice of clients. You can do a wider range of products in terms of additional sales. So whether you can do equity release, you can do second charges, you can bring people in to do that sort of thing. You can work as part of a team. It also allows a lot more remote working opportunities, which can be really good. And whereas an estate agent needs you in the branch, when you are with a broker, a lot of them will be quite happy with you working from home and being flexible around the hours that you do. So those are the 3 ways. Banks, great if you want employed. However, right now they're not really recruiting. So it's like hen's teeth. If you can find one, jump all over it. Estate agents, again, can be a really good option. Generally will be more employed than self-employed. However, they are pushing more for the self-employed option. And then with a broker who has the capacity to train people, and again, the reality is that most of the roles there are self-employed. So to give you an idea, I had a quick look on Indeed just before we came on here, and right now if you look across the whole of the UK and search for mortgage broker, there's 493 jobs if you're experienced and you're competent advisor status. Now, if you go through them, you'll find they're split about 50-50 between employed and self-employed. So once you've got CAS status, there's options there for both ways. Very few of them are actually with the banks, as I said, or estate agents. The vast majority of them are either with the really big estate agencies who deal with new build, that type of thing, as opposed to just looking at every product, or they're with a lot of the smaller independents, or they are with brokers like ourselves. Of those 493 experienced roles, if you add in the caveat that it has to be a trainee role, that drops down to 11. Now, that obviously is a bit scary if you're a new trainee trying to get into the industry. However, to break that down even further, 4 of them are for employed positions. That's it in the whole of the UK. And then there was 5 listed as self-employed. And then if those of you got at math going, well, that leaves another couple of roles. They weren't really trainee mortgage protection advisor roles. They were very, very much paraplanner roles or administrator roles, with the idea that you could go on and train to be a mortgage advisor in a couple of years. So if you look at it that way, you might say, well, there's not a huge amount of opportunities. There actually are, because not everything's listed on Indeed. So speak to your local brokers, ask them if they're doing it. There are some networks such as ours that we're part of who do take on people who have non-competent advisor status. And for example, we have a whole academy that takes people on. We're not really limited on the number of people, so taking on anyone who fits our culture of craziness. You'll find that there are other companies doing the same sort of thing, and there are some networks actually bringing people in and training them in-house and then passing them out to brokers. So just because the numbers there look a bit bleak, don't be disheartened, there are options for you.